Hello everyone and welcome to Trade Talks. My name is Yogesh. Over the past decade, Uber changed urban transportation, disrupted entrenched taxi industries, defied regulators the world over and beat back questions about how it was altering the nature of work. On Friday, it was tamed by Wall Street. The ride-hailing giant's first day of trading on the New York Stock Exchange began with a drop from its initial public offering price of $45 and its stock closed down 7.6%. By the end of Friday, Uber's market capitalization accounting for stock options and restricted stock stood at $76.5 billion, barely above the $76 billion that private investors pegged it at in August. Its stock tumble, which was highly unusual for what are typically carefully collaborated offerings, immediately raised questions about how investors' appetite for other money-losing tech startups that are poised to list their shares. It also pointed to miscalculations by the Wall Street banks that had taken Uber public and signified a disappointment for Dara Khosrowshahi, the chief executive, who was hired partly to steer the company through a successful IPO. Uber raised $8.1 billion from its IPO, but the company and its bankers appear to have misjudged how much investors would embrace the stock, which closed at $41.57. Last year, bankers said Uber could be valued at $120 billion upon its IPO, which would have made it the biggest American company ever to go public on an American stock exchange. Uber is the biggest company to emerge from an age of smartphone apps, which began just over a decade ago after Apple introduced the iPhone in 2007. Other companies have adapted their businesses to mobile devices, but Uber was a mobile native, letting people hail rides with the touch of a button on their smartphones. If you happen to glance at stock futures after the US raised tariffs on China just after midnight, you might have been surprised to see the markets moving higher. What's the takeaway for traders and investors? Well, tariffs went up and the world didn't end. Treasury prices are rising, which could be a headwind for financial shares. Infotech and industrials could also find themselves under new pressure. How you look at the situation depends on what type of investor you are. It's arguable that as crazy as this week has been, it has something for everyone. For traders, this week has probably seemed like heaven with all the volatility. For investors, all the noise has been irritating, but it's also offered a chance to find companies at lower prices after the long rally. It's actually instructive that the tariffs went up the same day Uber is scheduled to have its initial public offering. Just because it's the first day of tariffs and the first day of Uber doesn't mean you have to trade on the first day. There's nothing wrong with letting things play out a little. There's no award for being first. That being said, we should use the day trading strategy for Uber stock at least for now. It has got listed at the time of maximum volatility, which will give an opportunity to both buyers and sellers to enter and exit from their trades. Taking a decision on a long-term investment in Uber is a bit of a stretch. I think you should wait for at least 6 months and let the price settle before you decide to have a long-term stake in the company. Or, if you do jump on an IPO, you might want to consider buying shares in partial increments rather than going all in at once. People can be excited to invest in these companies, but it's good to keep the potential downside in mind. Thank you so much for watching this video. To keep yourself updated about the latest happenings in the world of financial markets, subscribe to our channel. To learn more about investment strategies, register for our weekly seminars and webinar on www.century.ae. My name is Yogesh. You have a great week ahead.